That's going to bring us to the main plays that we see presented with the Bollinger Bands here. Now, technically, there's really three methods or three plays that we typically refer to. I'll highlight them here because I've actually added a fourth one. The three primary ones are the squeeze, the walking the band, or also known as the trend trade, and then the reversal. And then kind of the outlier here is the false break. I've put a separate bullet here because it's so important, but really you need to know the false breakout, or often called the head fake, is really just a variation of a specific signal we get inside the squeeze play. So those are actually related here. I don't care how you choose to think of it as 3 or 4 plays, but this is the way we're going to talk about it. So let's look at each of these. We're going to learn about the plays here, and then what we're going to do as we get into the further classes, we'll start to look at them in more detail. But right now I'm just going to present the plays to you. So the first one is what we call the squeeze play. This is probably the most popular Bollinger play that's out there. It's the easiest to identify, and it usually is going to happen at the beginning of a trend. So, everybody wants to identify the beginning of the trend. We'll go look for some squeeze plays. Here's what happens with the squeeze. When you get into a period of low volatility, and let me clarify here, low volatility means the stock is not moving a whole lot. Oftentimes when we talk about volatility, people relate it to, say, for example, the VIX. Well, the VIX index is the volatility of the S&P 500 futures, and that's typically going to go up when you've got a bear market. Volatility in the stock itself is something we refer to how much the stock is actually moving up or down, either direction. And so when we talk about a period of low volatility related to Bollinger Bands, what we're saying is there's not much movement. The stock has kind of come to a halt, and we're not seeing a lot of price movement in that stock at that time. That's what I'm referring to when I say low volatility. So during periods of low volatility, what happens is the bands squeeze together, and that's where the name comes from. This contraction, it's only going to last for a little bit of time. You can't have that volatility totally disappear and stay gone forever. It's going to last for a little while, and here's the good news. When it breaks out, it typically leads to a new trend. That's why so many people like to find and identify the Bollinger Squeeze, because again, it's often the precursor to a new trend. Let's take a look here, and I'll show you a couple of Bollinger Squeezes. There's a few that are in here. There's one that's really obvious right here. You see how these bands pinched together. In this case, it only lasted for a couple of days, and then it broke out to the upside, and we had a new little bullish move here. We had kind of a pseudo squeeze over here in the middle. You see how we had a relatively tight formation here, and then it broke out. But the one that's really obvious is right here on the right side of the chart. Take a look at that picture. Notice how tight these bands are, and we've been here for a couple of weeks now. Well, when you see that volatility has got to go somewhere. It can't stay that contracted forever. So naturally, it's going to break out eventually. Well, watch what happens with this trade. If I scoot it forward, there it is. You see the breakout of the Bollinger Squeeze. Here's the squeeze. The bands have contracted together there, and in this case, it broke to the downside. And if you've gone bearish around $70 a share, before you know it, just a couple of weeks later, we're down here to $50 a share. And you see how the bands expanded to allow for that volatility to come in, but it also gave us a really, really powerful play looking at that squeeze option and then moving into a bearish trade with it. So that's the Bollinger Squeeze. Now let's look at the next variation here. This is what we call the false break. I want to clarify, the Bollinger Squeeze is the signal. The false break is a way that the Bollinger Squeeze could play out. So I've put it in here as a separate bullet point because it's so important, but it's really just a variation that you will see as part of the squeeze play setup. So this is going to start as a Bollinger Squeeze, and the trade's going to break to one side. It's going to look like we've got a new trend that's breaking out here, but then what happens is within 2 to 4 sessions typically, might be 5, but usually it's 2, 3, or 4 sessions, it's going to display some candlestick reversal signals. When you see that, that's why it's so important you understand your candlesticks. When you see those reversal signals, flip your direction. Take the trade in the opposite direction, and you're going to want to trade it to the other side of the band. In other words, it's a head fake. You think this trade is going to break out into a new trend, and instead what happens is it starts that move. Within 2 to 4 sessions, it reverses, and the way you're going to know it again is to recognize your candlestick signals. Candlesticks are really, really important in being able to identify this trade when it happens. Take a look here. This is on the Aussie US dollar, and notice what happens here. We had a really great, perfect textbook Bollinger Squeeze setup. We had another one over here on the left side. You see that squeeze? And it broke to the bearish side, and that was exactly what you expect. Now we've got it again, and everybody's thinking this is going to be a bearish trade. Well, there's breakout day number 1, number 2, number 3, number 4, and look at what happened. This 3-day, I should say, set of candles gives us a morning star reversal. When you see that picture right there, you've got to get out of the trade. You look at it and you say, I thought this was going to be a bearish trade. This morning star reversal tells me the opposite. I'm out of the trade. And what John Bollinger does here is he says he'll take the opposite trade immediately, jump right in to a bullish trade, and our target is going to be the upper band here. Okay, so that's going to be our target. Well, in this case, that's going to represent, because we're looking at the Aussie US dollar trade, that's going to represent about 300 pips. If you're using full leverage on this, that's almost a doubling or a little bit better than a doubling of your money on this trade. So it can be a really profitable trade here. Watch what happened with this trade. It took a little bit to get going. Initially, there's your Morningstar reversal. Initially, it stalled for a couple of days, and then it finally went, where did it go? Straight to the top of that band. And then what happened? The bands worked just perfectly. We got stuck right in the side of them here. Just exactly what you would expect in a sideways move with a picture here of your Bollinger Bands. But that first part of the trade, that was where the money-making opportunity was. You got to really be on your toes with this trade. This is a little bit different than a lot of the trades we've looked at through most of our TradeSmart training, where we often are waiting for confirmation. This is one where you're really anticipating the move. You see the signal, you immediately buy, and you've immediately got your target. It's a really quick trade, and here's a great example of where that played out. This head fake is really common. It happens a lot. And if you don't know it, that's why I made it a whole bullet point. If you're not aware of the head fake, you'll start to think the squeeze plays never work. In fact, the squeeze is a great signal, but you've got to be aware of the two ways it plays out. One way, it breaks out and you've got a new trend. The other way, it starts the break and it head fakes, and you've got to take the opposite trade immediately. And if you do that, you'll start to really fall in love with these Bollinger squeeze pictures, because it's a very, very profitable picture that we get.